Today we are discussing the Limited Partners Quarter as part of the Deal Street Asia 2020 Summit. But first of all, a big thanks to Joji Thomas Phillips and the entire Deal Street Asia team for organizing and putting together another wonderful Singapore-based summit here in 2020. This year, due to unanticipated circumstances, we are all forced to conduct this summit virtually. But just because we are virtual does not mean that we lack in any reality in the collective issues that GPs and LPs and DFIs deal with currently. Hence, welcome to the Limited Partner Quarter, which is in 2020 is being conducted in virtual reality. Before we get started today, I would like to introduce our illustrious panel. And as I introduce them, I apologize in advance because there may be additional information that our panel wants to share with you, and they're very welcome to do that. So without much ado, let's turn to our panelists. First, we have Iesan Tsai. Iesan Tsai is a managing director and head of private investments at Kiri Capital, which is primarily involved in asset allocation and co-investments as its internal strategy. Iesan also concurrently serves with yours truly on the board of the Singapore Venture Capital and Private Equity Association, which means that she has a broad understanding of the issues facing the LP and GP community within Singapore as well as across ASEAN. Prior to Kiri Capital, Iesan was the head of Asia at Hermes GPE. And not to throw any humor into this, but she was also a peer of mine, or I guess a rival of mine when she was at Stanford, which was the arch rival of my undergraduate institution. Iesan also received her MBA from the Wharton School of Business. So thank you very much for joining us, Iesan. Our next panelist is Huai Fong Chu. Huai Fong is the regional lead for East Asia Pacific Funds at the International Finance Corporation, which is part of the World Bank. As someone who is supremely involved in allocating the capital of the world's premier DFI, she sees both allocations as well as direct investments. Prior to IFC, Huai Fong was vice president of funds at DEG, and she is a graduate from here in Singapore at SMU University. So thank you very much for joining us, Huai Fong. Moving on to our next panelist is Alex Schmitz. Alexandre is the managing partner and head of Asia Pacific at Capstone Partners, where he has spent almost a decade helping out GPs in their asset raising strategies, as well as operational setups. Before joining Capstone, Alex was a general partner for 15 years at Cobepa, which was a large multi-family office investing in private equity with a pan-European strategy. His strategies involved growth equities, buyouts, and clean tech at Cobepa. During Alex's tenure as a GP, he also spent much time teaching MBA students in Vietnam, which means that he has been actively involved in Asian private equity since 2000. So thank you very much for joining us, Alex, today. And finally, about your host moderator, myself, as many of you know me already, my name is Anupum Khaitan. I serve as principal at Symphony Asia, which is a private equity and venture capital GP operating in Asia. Symphony's management team is the longest running in Asia, clocking in at its 40th birthday this year. In addition, I also serve on the executive committee of the board of the Singapore Venture Capital and Private Equity Association. The SVCA, as we're known, serves to represent the needs of various constituencies in Singapore and Southeast Asia, including the GP, LP, and DFI communities. So thank you very much for joining us, and thank you very much for our panelists and our audience for joining us today. So today we are discussing a very hot and interesting topic, if you will, about the views of limited partners, which are ultimately the customers of private equity and venture capital funds. So this is a very important topic to all, and let's go ahead and get started. So the first question today goes to Iesan. Iesan, as someone who has sat on both sides of the limited partner equation, both helping them choose various funds and today allocating funds yourself, does performance incentives matter? What's your particular view on carry, and particularly with vintages that are maturing in this environment, COVID-induced environment? Is carry really relevant anymore? Or do you view the way forward similar to other asset management classes where fees are dwindling and are expected to do so for the long term? Iesan?
Yeah, thanks, Anupum. Excellent question. I think obviously a very pertinent one given in a post-COVID environment. I think what a lot of LPs are seeing is greater consolidation on the upper end of the market, right? The bigger, the path of least resistance in a sort of DD process is to go with the manager you were with before. So all the winners, have very high velocity fundraisers. That being said, I think we keep a close eye on both beta and alpha, right? So I think for those who provide some sort of beta market allocation, those are asset management, asset gatherers where carry, to be honest, it doesn't function as well into the investment team's processes. That being said, I think the bulk of what we're looking at is carry driven. I think we want to see managers that can perform through any cycle, have been hitting those carry numbers at every point in time. And we do look, and it's a key piece of diligence. We always look into the structure of the carry, how much goes to the house, how much goes to the team. I guess my kind of comment here is obviously Asia and Southeast Asia relative to US and Europe is obviously several iterations behind, right? So I think a very common phenomenon we see is for managers that are not coming from the large regionals, kind of the Western regionals, the Warburgs, the KKRs, is that, carry figures very considerably into team configuration, team stability. Key man risk is a much bigger problem in Asia. And I think, what we do see is there haven't been as many kind of successive funds after a certain number. I think in Chinese culture, they say 4, 4 is a word for death. And unfortunately, I think a lot of, we do see that the fund fade from fund 3 to fund 4 and the lack of discipline. So I think it does figure very considerably. I think what's great though, is that, in sort of the end of the chapter of one book in pre-COVID, sort of 2019, there is a chapter 2 new book. While at the moment, the bigger guys are definitely getting bigger, there will be a readjustment at some point. It's a very entrepreneurial period. I think there's a lot of succession going on within the industry between the older generation, the younger generation. So I think over the next 5 years, that could bode well for managers where there's a talent gap really at that kind of mid to senior level. There will be good managers that will come out. And I think, altogether, carried, bottom line, very relevant still.
Right. Okay, great. Thank you. Wonderful answer there. And I think it's a question that's very relevant actually to a lot of GPs today, especially those that are trying to develop their platform and their strategies. So now I'd like to turn over to Alex. Alex, with very large swings in the valuation of asset classes this year, particularly, such as debt, equity, other illiquid assets, should allocation really matter to LPs? What marketing strategy do you use for the GPs to advertise and market to the LPs about what they should be concerned about? Should they be greedy when asset classes such as private equity tend to outperform in vintages that are born in economic crises?
First of all, I would say that if you take a global picture, Asia is extremely well positioned compared to the West. And it's both from an LP standpoint and GP standpoint. Asia is one of the regions where the AUM dedicated to private market is really expected to grow significantly, which is not the case anymore in a region like Europe, for instance. And at the same time, if you look at the GP level, it's probably the most attractive region at the global level in terms of recovery post this crisis. China is already on. We expect that both India and Southeast Asia will rebound strongly, driven by the long-term structural trend, but also the catch-up effect after these last 9 months, which have been quite painful for everyone, including for the GPs and their investment, whatever it's gross capital or buyout. And in that context, the most important things we recommend to all our LPs is the manager selection. Compared to the West, manager selection is much more important. If you bet on a buyout manager in the US, whatever it's a quartile, a top quartile or second quartile, you will make money. Here in Asia, and in particular in Southeast Asia, the difference between a top quartile performer and the fourth quartile performer can lead to dramatic impact on your own portfolio. Thus, more than ever, be selective. And in that context, we always try to pick the best managers possible to offer them to our LP networks.
Okay, fantastic. Thank you. That's a very interesting perspective. And one which I think is perhaps not fully appreciated in the global context. So thank you for sharing that. Huai Fong, ESG. I know that ESG has been discussed ad nauseum now for several years. In this COVID-induced environment, however, there's been a lot of marketing towards supporting ESG, and in fact, ESG and impact funds have done very well, according to various news media. And if you recall, last year, for example, also ESG was an important topic. In fact, it was made the official theme of the Singapore Venture Capital and Private Equity Association. But in an environment today where limited partners are pushed against the wall and need to pay out their pension obligations, does ESG trump returns? Is it possible that ESG and verification and compliance can lead to long-term additional costs, which impact net returns for their ultimate beneficiaries? Huai Fong?
Thanks, Anupum. So I think you are right to point out that this was also talked about last year. So it has been a long-term trend, I would say. It's not something that's really new. I think it's a trend that's actually trending upwards. We do see more focus on ESG, on impact, both at the GP level as well as the LP level. I do think that in the long run, it does make your portfolio more resilient. So it's not actually what we consider as a cost, but rather an investment in the long run. So what we always tell our GPs is that really, if you are doing all your due diligences on all other aspects, then you shouldn't be forgetting, things that are really pertinent, things that you might face every day in your operations, which is the environmental segment or the social segment. In the current climate where technology and digital innovations are actually the kind of hot sector, a lot of people think ESG is not relevant anymore, but actually the S component in ESG is very relevant for such companies because they hire a lot of people and their impact is really great. I think actually the good firms with good leadership do see it very seriously, and actually that separates them from the rest of the pack.
Yeah,
Anupum. Go ahead, Iesan, please.
Yeah, if I can add to that, I think if anything in the post-COVID world, definitely even more relevant would be my takeaway. I think there's a lot of tension in the world when it comes to sort of the divide between in terms of wealth gap and other areas and in technology, as Huai Fong outlined. I think that A lot of the regulation is not, it's a bit reactive in some countries. Countries react very differently. Some have the regulation first, but actually the vast majority kind of react. And as an investor, I think you have to be a lot more forward-thinking than even on the regulatory side. You got to think several steps ahead to protect that investment. And I think so fundamentally people do question a lot more. I think the burden is for the LP is to have even a more stringent set of requirements than what's the regulatory basis. That's one. And I think the other point is, I think we've seen this sort of even in the US market, for example. A lot of the companies that have a lot of traction, particularly from retail investors, especially for the younger generations, which are actually playing the public markets for the very first time, they want to invest in companies where the values resonate with them. So I think that's going to be true, especially going forward in a lot of these tech companies. So it's quite important, I would say, even more relevant today than even like say a year ago.
And that is a fantastic point, right? It actually shows that ESG is becoming relevant, and it helps to actually protect the investment as well, which is, I think, a very strong point. And just to our audience here, we finished the first round of questions, but if you would like to ask any questions, any pressing questions or even interesting questions, please feel free to type it into the chat apparatus on your screen. And please include both your name and company name as well, so that we can properly present the question to our distinguished panelists. So Iesan, thank you very much for also giving us your view on ESG here. I wanted to go on to the next set of questions for everyone. I wanted to ask you specifically, do allocators ultimately care about ESG in the same way that DFIs do? So for example, DFIs are looking at this perhaps from a better world scenario. However, allocators may be looking at it from a cash-on-cash return. So I wanted to ask you your view on that very briefly. But also, after you answer that, I wanted to ask you about the venture capital industry, which has grown quite dramatically in Asia and in particularly Southeast Asia in the last few years. Is this a good thing because it accelerates the progress of capital formation and leads to better economic outcomes? Or is it the proverbial canary in the coal mine? Is it literally 1999 in Southeast Asia venture capital? So Iesan?
Yeah, so I think on your first question, do we, as allocators, we look at it on simple sort of cash on cash returns? No, I would say. I think that fortunately at all the institutions I've been at, we haven't been so, we didn't have such wide mandates where there weren't good enough deals which didn't have ESG issues. I think, if there's a company that can make good returns, without this issue, why bother with the ones where, kind of that, I think that there's good deals out there, and there's no need to chase what can be a negative. That being said, I think we do take a little bit more nuanced view at point times where we say, yes, it can be, kind of a bit in a certain sector or segment that is sensitive, but can private equity be a force for good? Can the manager help this company increase the ESG standard? In that case, versus the base case where no, the company continues to kind of go in its historical track record of bad practices, and then we weigh the good against the bad, right? I think that's one. And I think on your second point on, sort of what's going on with VC, so I think clearly, Southeast Asia in the last few years, the venture capital amount of capital has exceeded, traditional private equity from fundraising and deployment. And I guess it is a bit of a follow-on trend, obviously, from US and China. But I guess the question in my mind is Southeast Asia really ready for that? Is it at a point where it is ready? I think that we are still a lot further behind than people may have thought. I think there is a lot of capital, especially in the sort of A rounds or even kind of seed capital. I mean, obviously that has changed a little bit in the current environment, but I would expect that similar to sort of other countries at this point in time, that the trend would be towards those who already had a toehold, those who already have certain kind of capital funding and backers, that those will continue to win. So I'd be quite careful sort of on the earlier end. You know, as I said, sort of there's a chapter closed on one book and there's a chapter opening another, but is this the right time right now to start in that very early chapter? I'm a little bit more skeptical on that point of view. So I think we place very selective bets on sort of the growth companies which already have a clear market position, and not just trying to figure out a monetization or figure out a certain model. So yeah, hopefully that answers the question.
Yeah, thank you very much. And so it sounds like, if I'm reading between the lines here, you're suggesting that it could be 1999 in Southeast Asia venture capital. And so I wanted to transition over here to Alex. Alex, this is a two-part question for you. So very briefly, do you agree with Iesan, you know, yourself as somebody who's helping out various GPs, whether it's venture capital or private equity, with respect to formation? Do you think that there is an over-exuberance for venture capital and startups in the region? And is it good? Is it a necessary part of the progress and acceleration of society, right? Of people who are perhaps moving into the middle class, into affluence? So do we need more startup capital? And then my other question for you is that perhaps on a more fundamental level, over the past few years, I wanted to understand from you, which asset classes are institutional LPs allocating towards within Asia? And has this allocation strategy over the past few years perhaps changed in the last several months, you know, with this quote unquote new normal that we are all facing, you know, in the era of plague and pandemic? So Alex, over to you.
To answer the first question and to bring a bit different angle compared to what Iesan said. When I moved to Asia 10 years ago, or a bit less than 10 years ago, it was all about China. And when you look at the funds that have been raised over the last decade, China has really dominated the VC space. Today, we can see the emergence of many VC players in Southeast Asia as well as in India. More and more, the two sub-regions are connected with big players like Sequoia or Vertex operating through the same fund in the two sub-regions. And I would say that this huge expansion in number of players is a good thing for the region. The key question for all LP contact is to find the right entry point to have an institutional solution to invest in that segment. But for sure, we are convinced that the industry will continue to grow with a relatively similar type of population. The money allocated to VC is still a fraction of what China has done over the last few years. And the other thing which should drive the industry, the VC industry going forward, is the emergence of real business models that are unique. Because a lot of people 5 years ago were claiming that Southeast Asia or South Asia were market for Me Too only. When you look at the emergence of business models like Grab or Gojek, they are stronger than their peers in the West. You have super apps that have been developed. It should continue to do to develop that way. And we believe that if you find the right institution to put money at work in the proper methodology, you can do probably more money with a lower risk than the traditional buyout or growth capital, in particular in Southeast Asia. To answer your second question, or the second part of the question, in addition to private equity, there is an increased demand for the other segment of the closed-end fund. Whatever the credit, the private credit is more and more something that attracts the interest of both Asian investors, but also non-Asian investors for putting money at work in the region. We can also see the impact of the COVID on the entire real estate industry. you have more and more opportunities for opportunistic or value-add fund managers that will have to reposition some assets or create new assets just to cope with the demand of the market. A lot of people are claiming that real estate should collapse after the COVID. When you look at a city like Singapore, it's not at all the case. You have more and more tech companies that are demanding very specific type of real estate asset. And in that context, if you're a good value-add manager in the real estate space, you can expect having a better deal flow today than 5 years ago. We are really convinced that the real estate segment, maybe not on the core segment, but more on the, as I said, opportunistic or value-add segment, should deliver very good return going forward. The key question is to know if on the infra side, the last pillar of the private market, it will be possible to find good fund managers to really reply to the demand for more megawatt and more clean megawatt in the region. And so far, Southeast Asia had some difficulties to deliver institutional return in that segment. We hope as placement agent to be able to find the right managers that will be able to generate at the same time good return for their investors, but also a good thing for the entire region that needs to have more megawatt going forward. Mm-hmm. But in other words, in the 4 segments, a lot of good things to come.
Right. Okay. Absolutely. Fantastic answer. Thank you very much. And Huai Fong, to follow on from Alex here, have private institutional mandates impacted the IFC's allocation and investment philosophy? Does the IFC, for example, try to balance out capital funding to make sure that all sectors, particularly those that are overlooked by the private sector institutional investors, fulfill their true obligations? And, for example, Alex had just mentioned clean tech. And then a second question for you is, what is ultimately the basic approach that the IFC takes to new managers of first-time funds? And how does it really help them get set up and operational in Southeast Asia? Huai Fong?
Sure. Yeah, I think the way we do things are a little bit contrarian. So not, it's very different from what the commercial funds would look at. So we definitely try to gap the differences in the focus between what the DFIs look at and what the commercial funds look at. So for a start, our mandate only allows us to look at emerging markets, right? So we invest in areas, in places like Southeast Asia, in Africa, in EMENA, where not many funds or fund of funds are already active there. And we try to deploy actively in those and consistently in those regions. I would say right now, IFC is actually the largest emerging market LP. So we have the most commitments globally to emerging markets. And we do try to mobilize capital as well. So whenever we invest in something, we do hope that, this gives us kind of strong statement as well as endorsement to the fund managers so that they will be able to mobilize commercial money thereafter and come in, alongside us. On your second point on how we evaluate new managers, that's also something that I see is maybe more peculiar at compared to the other commercial fund of funds. So we do look out for emerging managers, first, second-time managers. We don't invest in all of them, of course. A lot of fund managers come to us and say, hey, you say you support first-time fund managers and we are one, so invest in us. There is, of course, a bar. We need them to be sustainable. We need them to do the things that, that fits to the strategy of the region, fits the thesis of the region, and in the long run be sustainable so that they could build a family of funds. What we do is, of course, we try to be a sounding board really early in the setup of the funds. So we let them know, what kind of strategies, we are seeing in the market. And, of course, we don't change their strategies, but we let them know if something does not make sense. And we play a strong role, I would say, in the formation of the structure in terms of the legal documentation. So what should include, what they should include, what are the good governance standards. And we also include environmental and social standards, which is very core to our mandate and also very close to our heart. Typically, we provide them with IFC performance standards, which a lot of the other DFIs also follow and adhere to, and a lot of GPs in the market as well follow, to give them a baseline as to what they should look out for, when they evaluate their portfolio companies. We also play an active role in the advisory committee of the funds. And sometimes you might be surprised, but first-time managers might not know exactly how much, what constitutes a conflict and what they should discuss at the LPAC. These are pointers that we give them, kind of free advice in a way.
Okay. Well, thank you very much, Huai, Fong, and our panelists here. Now to move on to a very interesting aspect today. We're going to have a very quick lightning round for all of our distinguished panelists. So what these are rapid, quick-fire questions to our panelists and literally a 5-second response. So if we could also go in order, please, perhaps Iesan, you can answer first. Huai Fong, you can answer second, and Alex, you can answer third. But I'm just going to shoot out some questions and let's see where the chips may fall, so to speak. So, okay, let's get started here. So getting back to ESG for a second. So we talked about how ESG is perhaps not going away, not diminishing in stature. So is private equity and venture capital ultimately the best way to force ESG principles in a place like Southeast Asia, broadly speaking? Iesan?
Yes, I can take a thought leadership role. I think, that's my quick answer.
Thank you. Huai Fong?
Yes, I think we can, for sure.
Fantastic. Alex, are you going to be a contrarian here?
No, I believe that ESG is for us a filter to pick the right one.
Okay, great, fantastic. Okay, so it sounds like there's quite a consensus that ESG is a powerful force for change and goodness in the region. So the next question has to go with the top sectors. What do you think will be the top performing sectors in the next 10 years? So for the current vintages just getting started with their investing mandates, Iesan?
Fintech and cybersecurity.
Okay, fantastic. Huai Fong?
Fintech and healthcare.
Okay, fantastic. And Alex, are you going to be a contrarian today?
Not on the healthcare, which is on the top of my list. I would add education, tech enabler to boost the consumer. And I believe that there are good deals to do also in business services. Okay,
fantastic. So it sounds like there was some consensus in fintech and in healthcare overlaps. So those are, of course, two key sectors, along with B2B, as Alex was referencing as well. So on the converse side, then, if those are the top sectors, what will be the worst sectors to invest in during the next decade? And let's flip this around now. Alex, would you like to go first?
Yeah. Asset-heavy, cyclical type of businesses, in particular, if those businesses have a negative impact on the environment. That's very
okay. Okay, great, fantastic. Huai Fong?
Extractive materials or commodities.
Okay, fantastic. And Iesan?
Yeah, I was going to, similar to along those lines, but I think manufacturing and CapEx intensive businesses.
Okay, so it sounds actually like there's quite a consensus here also. Cyclical and extractive tend to be very much market cycle-based businesses, right? Based on the macro and the micro of economy. So that's very interesting to hear. And perhaps just to throw this out there, the IFC might be investing more in that then, right? If that's a contrarian sector in the long term. So with all of you wearing your LP hats, what is your biggest concern about GPs? What is it that the one thing you would like to see change? And Huai Fong, this time let's give you an opportunity to go first.
Biggest concern would be integrity issues.
Okay. Wow. Okay. That's very concerning. Iesan, what about you? What's your biggest concern as when you see the GPs?
I think, yeah, transparency and trustworthiness along those lines, and communication, I would say.
Okay. Wow. And Alex, are you in concurrence with them about integrity and communication issues?
I believe it's a really good concern. I would say that if you compare managers in the region versus their peers in whatever North America or Europe is the team turnover. You have so many GPs that are entering in their fund 3 or 4. And when you compare the team in prospectus of fund 1 versus prospectus of fund 4, it's not the same company. Can you trust the performance of fund 1 or fund 2 while yet significant team turnover over the decade?
Right.
Tend to be better today than 5 years ago, but there is still a long way to go in this part of the world.
Okay. So it sounds like ultimately everybody's in somewhat of agreement on agency issues, as they're called, right? So okay, so that's very interesting. Something perhaps GPs can also focus on. From a regional perspective, which region in Southeast Asia are you the most excited about today? Alex, let's go to you first this time.
For Asia as a whole, or emerging Asia as a whole, and for Southeast Asia in particular, we prefer to have a regional approach and not a pure country focus strategy. You know, it's awful to be forced to invest when you are a GP in a country while you know that there is high potential for currency impact or political impact for the next 6 to 9 months. We prefer managers that are able to arbitrate from one country to another potential good deals, and at the end having a smart portfolio construction, but more bottom up than being focused on only one geography.
Okay, fantastic. And Iesan, what about you? Do you have a particular geography that you're interested in today?
Yeah, I like regional managers as well, but I would say, you know, kind of next few years, I think we're slightly more positive on Vietnam and Thailand. Those are the 2 areas that kind of stand out post-COVID.
Okay, fantastic. And Huai, Fong, you know, having worked with your counterparts in Vietnam here, do you share Iesan's view, or are you more of a regional? I guess you have to have a regional mandate as well, but what's your thoughts on which geography within Southeast Asia?
In particular, in Southeast Asia, it would be Vietnam and Indonesia for me.
Okay, fantastic. So it sounds like there's an overarching multi-geography, but then we see a lot of Vietnam, Thailand, Indonesia, and places which are really, I guess, below that, the effective middle class stature that we would think of, for example, in Singapore or Malaysia. So fantastic. And then last question here in the rapid fire round is, what is the biggest opportunity overlooked in Southeast Asia today? And this is just please a one-word answer. Huai Fong, can I throw that one to you first, please?
Sure. I think climate change.
Okay. Alex?
Everyone is talking about growth for the region. We believe that the main opportunity is the inefficiency. And if you are smart, you can cook some deals that are well constructed. You benefit from the growth, but you benefit even more of the market inefficiency.
Wow. Okay. So productivity, if you don't mind me using that as a catch-all for that. And Iesan, how about you? What is the biggest opportunity here? Just one word answer, please.
I'm not sure. I haven't thought this completely through, but I'm not sure of a biggest opportunity. But I think a opportunity which conviction increased kind of in a post-COVID paradigm is education. And yeah, sort of bricks and mortar as well as ed tech.
Okay, fantastic. And for our last round, I think the audience might really enjoy this part, but we're going to jump into the elevator pitches here. And so this is for all of our LP adherents out there. How would you advise a GP to make that 60-second elevator pitch to an LP? If you had to wear a GP hat, what is it that you would advise them in terms of how to make their 60-second elevator pitch? And please just keep yourself also to 60 seconds because we are cognizant of time and Q&A afterwards. So with that said, let's go to ladies first. Iesan, can I throw the question to you first, please?
Yeah, I think, you know, I think your key differentiation, and I think that also particularly on the team, the value add, and I think some very specific examples of how you've worked with management teams. I think there's different levels of how well GPs work with the underlying companies. I think At the end of the day, people there's a lot of touch and feel in terms of getting to know a manager in Asia. So I think it's really underlying about the people and developing the relationship individually one-on-one. So I think, we've always said sort of co-investments is a really good way to get to understand a manager and walk through a process side by side, regardless of whether people execute. I know there's a lot of complaints from GPs, like everyone wants co-invest, no one actually does it. But I think that the process is actually really instructive. People have a better sense of how you look at companies, how well you think through the investment. So I think those were the key ones. Also, I think at the end of the day, continue on the follow-up, but in a way that's not giving too much pressure on sort of LPs, because obviously they have a massive universe. Yeah.
Okay, great, fantastic. And Huai, Fong, over to you now, please. 60 seconds, just considering the time here.
Yeah,
Thanks.
I think don't tell LPs, don't tailor your pitch to the different LPs. Just tell them what your strategy is, and just tell them their DPI.
The DPI. Okay, fantastic. Thank you for keeping it so short. And Alex, for your you've been an educator. What would you advise? What would your pitch be?
It's very simple. It's just to answer one simple question. What is your secret sauce to create value for your investors?
Okay. And I love the fact that your simplistic response, right, is actually very broad in terms of how it can be explained and the different facets it can cover.
Yep.
So, okay. So I just wanted to double check here for anybody who does have a question for our illustrious panel. Please feel free to send it over right away through the chat bot so that we can find out or we can respond to that. We'll just give some time. Okay. So while we're waiting for that, and perhaps Iesan, Alex, and Huai Fong, we have done an absolutely fantastic job. The first time in the world that we've completely answered all the questions before they were even asked. So let me throw some interesting questions out there then. So Alex, to jump over to you for a second here now, since you gave us the shortest answer of all, let's hear what you have to say on this question. But when it comes to GP performance within Southeast Asia, what does the data tell you? And does the data show that sector-specific GPs, for example, are better bets? Unconstrained funds are better bets? What is the data telling you, and how do you market that, Alex?
Good question, because when you look at the statistics over the last 25 years, for all the realized deals, in gross terms, nearly half of the deals that have been realized have not recovered the investment cost. It does not mean that the return overall is not satisfactory, because you have also the deals that have delivered 3 times, 5 times, 10 times the money. But in 50% of the cases, you have not recovered your investment, and that's before the management fee. Because you may imagine the pain for the LPs that have been charged 2% for 5, 7, or 10 years. This being said, the opportunity going forward is very attractive. More than ever, we are convinced by this part of the world to be better, to generate better return adjusted to the risk compared to other geographies. And I would say it's not only Southeast Asia, it's Asia Pacific as a whole compared to the rest of the world. Mm-hmm. We are big believers in Japan, we are big believers of India, we are even stronger believers in Australia.
Right. Okay, fantastic. And again, cognizant of time for our distinguished panel, very quickly to ask you, is 2021 back to normal? And a simple one-sentence answer, please, for everyone. Huai Fong, is 2021 back to normal for you?
Back to the new normal, yes.
Back to the new normal. I like the way that you pivoted on the answer there. And Iesan, what about you? Is 2021 where everything gets worse, or does it get better?
I think it'll get better, but it won't be, as Huai Fong, it won't be completely the same. So okay. Not completely back to normal.
Fantastic. And Alex, what are you advising GPs to say? Is it back to the new normal? Is it back to normal? Is it back to square one? What do you say?
different time, but the challenges remain the same. It's to find the money and to deploy it smartly. That's but when you can find the money, take it. Don't be picky. Listen to your LPs. It's more than ever. It's super important. And to that extent, on one hand, you have the emergence of family offices, which is good for the region. And more than ever, DFI have a lot of things to do, not only in terms of ESG, but it has been the engine and the trigger for a lot of new kids on the block. And I believe that institutions like IFC and others will continue to play a very important role in the region.
Right, and on that inspirational note, I just want to say a very big thank you to our audience, to Joji and the Deal Street team, and of course our distinguished panelists, Iesan, Tsai, Huai Feng Chu, and Alex Schmitz from their respective organizations. And on behalf of myself, Symphony Asia, and the SVCA, thank you to everyone for joining us today.
Thank you, Anupum. Thank you all.
Thank you.
Thank you, everyone.
Bye.